Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the 4-hour time frame with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside where either your wave 4 is finished or you're looking for a bigger 3-wave corrective structure. The common target for your wave 4 is between the 382 and the 05 Fibonacci, taken from the low to the high of wave 3, giving you a target between 67.5k to 66k, which as you can see so far is nicely respected. However, what you can also see is that the lows over here are made before the vertical line, the 1-to-1 Fib time, taken from the start to the end of wave 2 to the end of wave 3, comparing wave 2 with wave 4. It is most common for a wave 4 to end after the 1-to-1 of wave 2, meaning after this vertical line, but at the moment the low is made before, so this does impact the probabilities a little bit. If we first look at a scenario which continues the range in this wave 4, after which we then expect continuation to the upside, we're looking for a flat here with a 3-wave structure in a wave A double zigzag, A, B, C in W, 3-wave correction in X, and another A, B, C to the downside in a wave Y. And then inside wave B, we're looking for a 3-wave structure to the upside in either a zigzag or a double zigzag, where the minimum target is the 0.9 Fibonacci, taken from the high to the low of wave A. And then we're looking for a wave C to the downside, which most commonly in a flat structure, either a regular flat or an expanding flat, is moving below the low of wave A. Now that does mean that in this scenario you're going to get incredibly close to the invalidation of this impulsive structure 1, 2, 3, 4, 5, which therefore means that the alternative is a double 1, 2, wave 1, 2, 1, 2, and then continuation to the upside in a very big wave 3. The most bullish scenario is that your low is in and we are looking for continuation to the upside. In this scenario, we have a finished wave 1, 2, and a finished wave 3, either at the pivot here or the pivot here. Doesn't really matter, but preferably we see at least one more high for a wave 5. Reason is that the move towards the upside here looks very 3-wavy, as you can see. If this would be impulsive, then we need a 1, 2, 3, 4, 5, but then you can see that your wave 4 is incredibly short in time compared to your wave 2, while most commonly a wave 4 is longer in time than a wave 2, so therefore it increases the probabilities. This is a 3-wave structure, with the high here being a corrective high in either a wave B or a wave X, which increases the probabilities. The move towards the downside is corrective as well, which therefore increases probabilities to move towards the upside. At least that is what we want to see for a wave 5. The invalidation in this scenario is price moving to the downside, hitting the high of this wave 1 at 68.2k. The bearish scenario on the daily time frame is a zigzag A, B, C with a leading diagonal in a wave A 3-wave corrective ABC to the upside inside your wave B, hitting the 886 taken from the high to the low of A, which is a common target for B. Then we're looking for a wave C to the downside to move below 56k. On the lower time frames, we then want to count impulsive structures to the downside, and you only have to think about 3 structures, either an impulse to the downside, 1, 2, 3, 4, 5, no overlap allowed between a wave 1 and a wave 4, and at the moment there is lots of overlap here. Then we have a double 1, 2, 1, 2, 1, 2, continuation to the downside. However, the double 1, 2 would be 1, 2, 1, 2 here, but your wave 1s are looking 3-wavy and not a 5-wavy, and in a wave 1 we need a 5-wave structures, but as you can see it looks very 3-wavy to the downside here, which then leaves us with diagonals. But the only diagonal at the moment here would be then an expanding diagonal in a 1, 2, 3, 4, and then looking for a 5 to the downside to take out the low at 66.2k. If we look at the targets for an expanding diagonal, then the 0.5 for a wave 2 in an expanding diagonal is actually an uncommon target, while usually for an impulse it would be common. For an expanding diagonal, you would usually expect a deeper wave 2. The high of wave 2, however, is now also the invalidation at 70.6k. The 1.272 to the 1.38 is a common target for a wave 3 trend-based fib extension, taken from the start to the end of 1 to the end of your wave 2, and a common target area for your wave 4 is between the golden pocket and the 886 Fibonacci, taken from the start to the end of your wave 3. Inside wave 4, we are then looking for a 3-wave structure to the upside, preferably in this case an ABC, which preferably is already finished. In this scenario, we then have a wave A to the upside, a 3-wave B to the downside, which is 11 times longer than wave A, which is less common for a wave 2, a bit more common for a wave B. And then we're looking for a 5-wave move to the upside in a wave 1, 2, 3, 4, and a wave 5, which means that in this scenario, we have to count this final leg to the upside impulsively, at least. That is preferred. And the reason that is preferred is because if you do move to the upside and take out this high to finish an impulse and therefore finish 5 and C, this wave 4 here has to move to the low over here, making this whole structure your wave 4, and that is at the moment not preferred because of time, because you can see how short your wave 2 is and how long your wave 4 would be, which is incredibly rare and definitely not preferred. So at the moment the invalidation for an ABC to the upside here is at 69.6k. Looking at CVD divergences, we do have some bullish CVD divergences on the chart here, higher low in price, lower low on the CVD. The target for this divergence would be taking out the high, and you can see it here on yellow. We have a higher low in price, but a lower low on the CVD. If we then finally look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are higher for the bullish scenarios, which is initially the impulsive structure 1, 2, 3, 4, 5, and if we do hit the invalidation, then it is going to be a double 1, 2 with on the number 2 spot lower probabilities for the bearish scenarios. On the 15-minute time frame, or at least this structure to the upside, the probabilities are higher for the bullish impulsive structure or a double zigzag to the upside. In other words, either a wave 1, 2, 3, 4 and a wave 5, at least one more high preferably without touching this high here at 68.2k, as that is an invalidation, or a double zigzag to the upside in a WXY where you have a finished ABC, move down in a 3-wave structure in a wave X, and then move towards the upside again in a zigzag structure for a wave Y to at least the 0.9 as explained. The reasoning behind the probabilities is that expanding diagonals are very rare and never preferred unless all of the other stuff fails, and the move to the downside here from 72k counts best as either a WXY or then an expanding diagonal in a 1, 2, 3 looking for 4 and a wave 5. Now the WXY here has higher probabilities compared to an expanding diagonal, and therefore the probabilities are higher to continue up in either an impulse 1, 2, 3, 4, 5 wave structure or a double zigzag in a WXY for a potential flat in a bigger ABC. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.